What is investing? Simply put, it means putting money to work so it can grow over time. Instead of letting money sit still, investing helps it increase in value and build future wealth. Why do people invest? One reason is inflation, which makes prices like food and rent go up. Inflation means money buys less in the future than it does today, reducing its value if it just sits. Investing helps protect money from losing purchasing power over time. Another reason to invest is to build wealth by earning returns through assets like stocks and funds. Saving means putting money in a bank account for emergencies. It's safe and short-term. For example, $100 saved in a bank stays $100. Investing means putting money in the stock market to grow, with more risk and long-term focus. That same $100 has potential to increase but can also go up and down in value. The stock market is like an online marketplace where people buy and sell shares of companies. Stocks represent shares, or small pieces, of a company you can own. A shareholder owns part of a company by holding its shares. Investing involves risk, which is the chance of losing money, and return, the money you make or lose. Volatility describes how much prices go up or down over time in investments. If an investment's value decreases, that loss means money you lose. There are different investment styles like long-term holding, short-term holding, and trading. Investments can include stocks, funds, currencies, and real estate. Key terms include assets, capital, price increase, gain, and profit. Assets are anything valuable that can make you money, and capital is money invested. A price increase means a stock's value goes up from when you bought it. A gain is how much something is worth more than before, while profit is money earned after costs. Diversification means spreading money across investments to reduce risk. A sector groups companies in the same industry, like technology or healthcare. Market capitalization is a company's total value, found by multiplying stock price by shares. A bull market is when prices are rising, and a bear market is when prices are falling. Savings provide security and easy access for emergencies and short-term needs. Investing focuses on long-term growth to help build wealth over time. Investors buy assets with capital to grow wealth by earning returns, often long-term. Diversifying assets across sectors helps reduce risk and build wealth. Investors may sell assets in a bull market to realize profits.